I'm wondering if you could maybe tell us what you think all of this activity means potentially for the market valuations overall right now. And I ask this because when you see a deal like Saks Fifth Avenue saying it's going to spin off its website and create a separate operation for that. You see Neiman Marcus kind of following suit with that. You see a lot of insider selling, Adam Aron and others who are making sure they're locking in these valuations at this level. Do they know something we don't? Are they trying to make hay now? I think you just mentioned it a little bit. You want to make sure you take advantage of these valuations while they are here and use it or lose it. Should that tell the rest of us that lower valuations are coming?
Yeah, I mean, I think we're in a much more valuation-sensitive period of time. That being said, I do think we're in a tapering moment at the end of the year. We have a lot of short-term investors, not just in the institutional market, but the retail market now. So I think it's a bit overdone in terms of the selling pressure at the end of the year. So I'm a bit more optimistic towards the beginning of next year. Although I do think that we are in a much more valuation-sensitive environment. I think companies have to have longer-term scale with profitability and durable models, not just all the way straight up. I referenced in the letter that Stanley Druckenmiller said, the higher they go, the cheaper they look. That we're no longer in that kind of environment. I think you really have to have a grounding of metrics and a sustainable plan to get to the other side. So we are high in terms of valuations. That being said, I do think that relative to historical levels, we're at low rates. Financing environments are very strong. We are getting deals done. We have a stronger pipeline going into 2022 than we've ever had since the inception of the firm. There's going to be more attention paid to the regulatory and political factors in 2022 around that, maybe even more so than market factors to get those deals done, I would say. And look, more companies went public in 2021 than any time since 1997. So there's definitely going to be a digestion period and a focus period. But at the same time, the new generation coming up is very excited about the Internet 1998 2.0 or Web 3.0, as we call it, with crypto. So tons of activity of models that we believe in that are going to be part of this new ecosystem. And those companies will be going.
We've only got about 30, 45 seconds. You've been big into NFTs and the world of crypto, as well as sort of Web 3.0 and sort of metaverse. In terms of transactions, do the legacy guys try to pick up crypto? Is it too overpriced for them? Do the crypto guys try to pick up the legacy? How does this work?
Well, if you're China, you can have a digital currency for the country. If you're the U.S., we are in private industries a lot of times. So if you're a retailer, you need a digital currency. If you're a telecom company, you need a token. If you are a bank, you should have a token on your own. You don't wait for the government to do so. LionTree may have its own token in 2022 itself. For our clients, we would be accepting crypto from our clients to do business together. So I definitely think the legacy companies will be doing crypto all the time. I think SPACs may be looking at buying metaverses as well. So I'm a big believer in this environment.
Shepard Smith here. Thanks for watching CNBC on YouTube.